You've probably heard people say, the S&P 500 went up today. But what does that actually mean? Is it a company, a stock, an investment, or something else entirely? In this video, I'll explain the S&P 500 in the simplest way possible so you can finally understand what everyone is talking about. This is lesson number 8 in your beginner investing course, and each lesson builds step by step. My name is Jonathan. I've been investing for about 9 years, and this channel is here to help beginners learn investing the smart way. Let's start with a simple question. What is the S&P 500? The S&P 500 is not a company, it's an index. An index is simply a group of companies put together in one list. In this case, the S&P 500 includes around 500 large companies. These are some of the biggest and most well-known companies. So when people say the S&P 500 is going up, they mean that overall, these companies are increasing in value. And when it goes down, it means the opposite. Think of it like a scoreboard for the market. Instead of tracking one company, it tracks many at once. Now let's talk about how it actually works. Each company in the S&P 500 has a different size. Bigger companies have more influence on the index. So if large companies move, they can affect the index more. This means the S&P 500 is not evenly balanced. Some companies have a bigger impact than others. Now here's the important question. Can you invest in the S&P 500? You can't buy the index directly, but you can invest in funds that follow it. This includes index funds and ETFs. This connects directly to what we learned in the last videos. Instead of picking individual stocks, you can follow the entire market. This is one reason many beginners choose this approach. But remember, this does not mean guaranteed results. That's why many investors focus on the long term. When I first heard about the S&P 500, it sounded complicated. But once I understood that it's just a group of companies, everything became clearer. The S&P 500 is simply a way to measure the overall market. So let's quickly summarize. It's an index, not a company. It includes around 500 large companies. It reflects how those companies perform together. And investors can follow it through funds. Understanding this concept puts you ahead of most beginners. If you want to keep learning, make sure to subscribe and follow the full course. Let me know in the comments, did you understand the S&P 500 better now? In the next lesson, we'll talk about portfolios and how to build your first one. I'll see you there.